Thanks for joining us today on Market Call. I'm Morella Fernandez. Colin Cieszynski with us on the show, Chief Market Strategist at SIA Wealth Management. He'll take your questions on relative strength and technical analysis today. Here's how to reach us. 1-855-326-6266. You can also email your questions in Market Call at bnnbloomberg.ca. Colin, good to see you. Thanks for coming in.
Oh, thanks for having me. Good morning.
Let's talk a little bit about the employment numbers off the top. The Canadian numbers coming in. So the unemployment rate moved up, but that was also because more people were looking for jobs in December. Is there a reason to be concerned here?
Not at this point in time, no, because what's more important to me was that the street was expecting a decline of about 5,000 jobs, and we got an increase of about 8,000 jobs. So that's pretty good for Canada. That's a nice solid beat on unemployment. A slowdown was expected from the previous few months had been so strong. So to even be able to keep the party going at all was a good thing.
Okay, there were added jobs in manufacturing, which kind of was a surprise considering all the tariff noise we heard last year. Do you feel like we're past the tariff concerns? The markets are past the tariff concerns now?
I feel that at this point in time, unless something changes, everybody has had enough time to respond to the tariffs that were already put in place. So at this point in time now, negotiations continue, and as long as there's no other negative surprises, it seems like people have kind of started to get used to them and are moving forward.
There are negative surprises in energy, of course, with what happened with Venezuela and raising questions about the Canadian sector and what could be a knockoff effect on the Canadian sector. What do you see moving forward in energy, given what's going on, first of all, with Venezuela?
Well, right now it looks like, because as over time we may see some of the sanctions start to come off, and some of who they sell to and where might some of the flows might start to change as well. But what's intriguing was that on the first couple of days we did see a bit of softness in the oil price, and in some ways with it hanging around in the 50s, maybe we've already seen a lot of that priced in already. I mean, we had something where there was a pending war with Venezuela, and the price never really did much. So since then, we've seen the price didn't go down much either. In the last couple of days, it has intrigued me because we've actually seen the price of crude slowly starting to creep back up again.
But does it bode well in the sense that the price of oil was already pushed down so much last year, then it got this extra bit of a hammer now? Do you see things sort of balancing out in the future, or do we just not know?
At this point, in terms of supply and demand in the market, we just don't know. But overall, what it's suggesting to me, though, is that the underlying demand seems to be fairly stable, unlike natural gas, which is getting knocked all over the place.
Which is getting hammered, yes. Yeah. All right. Let's talk precious metals for a moment as well, because they had a very good run last year with gold leading, silver following, copper coming up as well. What are you looking at for precious metals in 2026?
Well, right now, what we've seen is that a lot of the uncertainties out there are still there. Nothing has really changed in terms of that, and it remains to be seen if the U.S. dollar has finally bottomed out or if it's going to continue declining like it did last year. I mean, it may not have the worst year since 1973 again, but it still seems to be fairly soft. Gold and silver had a huge run, especially silver, where once it broke through 35, it just soared. It was incredible. But so we probably won't see something like that again. But at this point in time, they do look like they still remain in favorable trends. We just may see it more moderate. We may see corrections or periods of consolidation along the way. Nothing goes straight up or straight down. But overall, at this point, the underlying environment for precious metals still seems to be positive, although certainly now the bar's been set pretty high in terms of trying to beat last year.
Absolutely. Expectations are up there. All right, let's take a quick break. We will line up some phone calls and some emails for Colin Cieszynski. He's Chief Market Strategist, SIA Wealth Management, taking your questions on technical analysis. Back in a moment. Welcome back to the show. Let's start right now with an email from Ash. Could I please have your opinion on Reddit, RDDT, on the New York Stock Exchange? We're doing technical analysis today with Colin Cieszynski. We will pull up that line chart in just a moment. I haven't looked at Reddit in a while, but when you pull up the chart, what do you see?
To me, this is a nice constructive chart. The stock had a big run in the summer of last year. It's been kind of going sideways through towards the end of the year. But if we look at the last month or so, it's quietly been resuming its uptrend. And this is a pattern technically that is really strong and really powerful. I call it the staircase pattern, where you rally for a while, you consolidate at a higher level, and then you rally again. A very nice, solid, steady accumulation pattern here. You're currently sitting about 250. Resistance looks about 275, 280. But you've also already on a breakout now, having cleared 240. So looking great technically here.
Where did you say the resistance was? 270, 280?
Yeah, the previous high there looks around 275, 280.
Okay, hard for me to see sometimes when it's so far away. But okay, 280, 270 is where you're looking at. And if it breaks out past that, that's a good sign.
Absolutely.
Okay. Let's go to our first caller then. Anita is in Markham, Ontario. She has a question. Hi, Anita.
Good afternoon. Thank you so much, Mirella. And my question is on Rio Tinto. Mm-hmm. What are your thoughts on this company with respect, in light of its talk with Glencore, and also with respect to its relative strength and the future of base materials? I'll hang up and listen to you.
Okay, thanks for the question, Anita. So Rio Tinto and discussions with Glencore, there could be some sort of agreement ahead, but that's not really clear right now. Let's take first just look at the chart for Rio Tinto and tell me what you see.
Sure. So first off, it's hard to comment on rumors of takeovers.
Sure.
They may happen, they may not happen, and we really
who
don't
knows
know
when. Yes.
So, absolutely. So we go back to looking at the chart, and what we're seeing here was that over the longer term, this was a chart that was in a downtrend. But look at this, about the middle of last year, absolutely broke out. It's broken out to new highs. It's taken out its late 23 high. It's still going. Base metals are running. Copper price hit a new all-time high this week, like all-time high. That's just absolutely incredible, because the previous highs were quite a long time ago.
Okay. So you see a run for base metals more generally, and Rio Tinto participating in that?
Yes.
Okay. She asked about relative strength as well, and you mentioned base metals generally. Is there anything more specific company-wise that you've seen enjoy the run as part of the breakout?
Well, we have seen, generally speaking, we're seeing that in our relative strength rankings of companies and sectors are going head-to-head against each other. For most of the last 6 months especially, in terms of metals and materials, it was all dominated by the gold producers. And then late last year, we saw the silver producers all take off. And now we're getting to a point where we're seeing a lot of the base metal names are starting to climb up the rankings as well.
Okay, so we'll keep an eye on that. Let's move to our next caller. Chris is on the line. He's in Delta, BC. Hi, Chris.
Oh, hello, Mirella and Colin. Good morning to you both. I'm wondering if I can please have your opinion on Lululemon. It's been talked about more and more lately. Mirella will probably recall it's been a top pick of a few guests in the last maybe couple of weeks. And Colin, I'm wondering if you can give me the technical analysis assessment. Thank you both and have a wonderful day.
Okay, so Lululemon, a really interesting one, Canadian company. They just announced a leadership change, waiting to find out who will lead that company forward, which could be key. But the competition in the space has been great. Some have said they've missed on some of their sort of style. And I know you look more just at what this chart shows you. So look at that slide, look at the little move up at the end of it. What's your read?
So what I would note about this, first of all, is we're in a big downtrend here, and we have been for the better part of 2 years. However, it looks like it might be bottoming out. Could we please change this to a one-year chart, please?
Okay, so what are you looking for?
What I'm looking for here is, it looks like it has stopped going down. And if we look here so we did have the downtrend through most of last year, but starting about September, we can see this floor started to form. It looks around 160. And we've seen it start to creep back up. So it's hanging around 200 right now, and it's bumping up against this kind of resistance level here in and around 200, 210. So again, it's constructive, though. We're seeing it like it goes up and it doesn't really come back off much. So it doesn't look like the selling pressure looks like it's fairly exhausted here. And it does look like it wants to form a nice saucer bottom here. So what we need now, technically, is for this thing to actually break out. So whether it's...
What did that look like?
What we would look like, to me, is you'd want to see it going up through to 210, 220 on volume, and not just it goes up for one day and gets smacked back down. You'd want to see it just steadily working its way up and holding on to its gains.
Okay, so would you be interested more the closer it gets to 210?
Yeah, at this point in time, it looks like it was at about 210 yesterday, so probably maybe a little closer to 220, but technically it is starting to look more interesting. It looks like it's on the cusp of breaking out, but hasn't quite gotten there yet.
All right. Okay, let's get to another caller then. Mary's on the line in Burlington, Ontario. Hi, Mary.
Hi, Marella. Hi, Colin. Thanks so much for taking my call. Colin, I'm wondering if you could give me a technical analysis of Leon's Furniture. Thanks so much. I'll hang up and
Thank you for that question. Leon's Furniture, I'm not sure I've looked at before, so let's pull that up and have a look. There it is. 28.36 today, down a little on the day, and dramatically down in 2025. Do you think that's tariff related? What would that be?
I would think based on the timing of this, it was most likely tariff related. Okay. But what's interesting, though, is that the bottom in and around 23 was still substantially higher than the low in 22, higher low, sorry, there's a low in 23, higher low in 24, higher low again in 25, and it's basically come up and it's bounced back and it is kind of hanging around. So it's basically looks like it's well supported. Leon's is a bit more of what we call a thin trader. It doesn't trade it as actively as other stocks, which makes it sometimes a little bit more difficult to read technically. However, we have these two previous highs that look like they're about 30, and consistently higher lows below it is forming a pattern called an ascending triangle, which is a very nice pattern. It's showing that even though it's kind of quiet, it still is nicely supported on the underneath. And so at this point in time, it looks like it's under accumulation, but again, hasn't quite broken out yet. You could see some significant resistance around 30 at those two previous highs of the last 2 years. But if it can get through, it would look great.
Okay. Let's move on to take a quick break. We'll line up more phone calls for Colin Cieszynski. He is with SIA Wealth Management, taking your questions on relative strength and technical analysis. Here's how to reach us. We're back in just a moment. Welcome back to Market Call. Thanks for joining us. Let's go to the phone line. Tyler in Toronto has a question today for Colin. Hi, Tyler.
Hello. Happy New Year, Marella and Colin. First time in a while. Colin, I wanted to talk to you about Royal Bank, but I'm also specifically interested in understanding how you would identify the end of a trend, because Royal Bank, it's been hitting all-time highs, as have many stocks. It's been plateauing a little bit on the dailies, but the weeklies still look good. When you see a stock that's rocketing up like this, it's probably wise to get cautious and not complacent. How are you identifying the end of a trend?
Okay, very good question. An interesting one. How do you identify the end of a trend?
So when we're looking for the end of a trend, and because it's sometimes hard because it's hard to tell, is it something in a normal correction within an ongoing trend or an actual trend ending? So usually what we're looking for in terms of an actual trend ending is that we start seeing support failures. We start seeing, so something hits a new high, corrects, comes back, doesn't get back to that high. You start seeing lower highs. You start seeing lower lows. You start seeing areas that we said this was support and then they fail. And even more so is if you fail, like, I don't know, say you had a stock above 200 and it went below 200 to say 180 and then came back and failed again at 200 to get back above it, then that would be the sign of an end of a trend. Or you start seeing the longer term moving averages start to break, like the 100-day or even the 200 days start to fall apart. And so it's usually not one thing. It's usually you start looking for a series of breakdowns, and not just breakdowns, but failed rebounds. And so just as it's kind of additive on the way up, it's also additive on the way down. And that's the big one you always want to be careful of. We're always careful with is getting a sense of, is a trend over or is this just a correction?
Okay, so when we look at Royal Bank, which has steadily been moving up, and we don't see a lot of sort of dip downs, more of a sideways move, what do you see?
Right now, the trend looks like it's intact, and there are common consolidation periods. We can look here at even the last fourth quarter of 24 through about the first quarter of 25, you just kind of didn't do much. You can, even the middle of 25, you can have 6 to 9 month periods, even within a long-term trend where not much happens, where something might consolidate or it might just go up a little bit. At least with the banks, you can sit and collect the dividends through those periods as well, and they do add to your total return.
Okay, so no obvious issue with the pattern ending for Royal Bank. Let's go to John in London with a question today. Hi, John.
Hi, Marilla. Hello, Colin. Colin, I own Fortinet and Palantir in the sort of security defense space, and I also asked about Apple. I'm not sure how you wish to address my questions, but Fortinet, I'm just about break even on. Apple, I'm way up over 5 years. Could you give me your technical opinion on Fortinet and if time permits Apple? Thank you.
Okay, thank you for the question. Fortinet is up now, 50% up over 3 years, 78.67 at where it stands. But yeah, where is that point? There you go. So that's a support of about 80, would you say?
About 80, and it's, of course, sitting right on it. It's, but there are levels technically in any market that we call them, they're reversal levels, where something is resistance, then becomes support, then becomes resistance, then becomes support, and so on over periods of time. And sometimes it's round numbers, and I call it the markets can get drawn to round numbers. So in this case for Fortinet, it looks like 80. It was resistance for a long time, support for a long time. So what we're watching here, and I talked about this on the previous call as well, is 80 has been a key long-term level for Fortinet, and it's starting to fail. And more importantly as well, it hasn't gotten back above it. So if it gets back above 80, then you could say, well, you're kind of hanging around the 75 to 85 kind of range. But right now it's looking quite troubling that it's broken down below 80 and has not come back up above it. So something you want to keep an eye on with that.
Okay, when we say it's broken down below 80, is there sort of how much it's broken down below that number that you pay attention to? Or just once it's below 80, it sort of makes you make a note of it?
Yeah, that would kind of be related to the price of a stock in general. So but for something like this, say an $80 stock, we'd probably be saying, if it got more than like 50 cents below, enough to establish that it was a clear break and not just a...
hanging around 80.
Yeah.
Okay. All right, he also wanted to look at Apple. So let's take a quick look at Apple right now and see where it is at today. Pulling up the line chart now, and Apple at 258.37, so up 79% over 3 years. But trending down in more recent days. So how do you read this?
It is. We're starting to see some profit taking here in Apple and in some of the other big names. And so far, it looks like it's profit taking a little bit of around the end of the year. What we would watch for here technically was this 250 is a round number and was a previous peak. So if you started taking out 250, say falling below that 245 would be a sign of deeper trouble, especially if it doesn't bounce back. But right now, at least, it still looks like it's in a correction.
Okay, so would you put money in at this point if you were an investor because it's trended down?
At this point, it's worth waiting to make sure it doesn't keep trending down further. There's always the battle going back and forth between picking up a bargain and catching a falling knife.
So you'd wait a little longer. Okay. All right, let's go to Rob. Rob's in Montreal. He's got a question today. Hi, Rob. Rob, are you there?
Hello?
Hi, what's your question today?
Oh, sorry, this is Elliot, but that's okay.
Sorry, Elliot, go ahead.
Please, I'm trying to invest in the Canadian market, and I can't decide between XIC, the 300, or XIU, the 60. How do you read the charts for the Canadian market, and is there a difference? Does the XIU or XIC outperform the other? Thank you.
Okay, thank you for the question. We will pull XIC and XIU up and have a look at that and do a comparison.
Okay.
Let's pull that up in a moment and take a look. There we go. Okay, what do we see here?
So what I would say these are two markets that I call fellow travelers. They tend to trend in the same direction most of the time. Now, the TSX 60 is obviously the biggest cap stocks in the index. And to be honest, it's about 80% of the weight of the index is the TSX 60. So it's most of the composite. So then the question you ask yourself is, what do I want to do about the other 20%? Because the other 20% is a combination of small and mid caps and junior and resource stocks. And so those are the deal with those is basically that you can get really good returns out of that piece. You also take on a lot more risk. It's a lot more volatile. in Canada trading in small and big caps. So the question is how much return are you seeking, or how much risk and volatility are you willing to live with as an investor generally? Because as I said, they both kind of trend in the right direction. The question is if you'll have periods last year. I mean, last year, junior resource stocks went to the moon, and the composite has outperformed the relative to the 60. But you're going to have other years as well where the junior resource stocks all get hammered and the 60 outperforms the composites. So it's kind of back to at that point, it becomes
what you're comfortable with.
Yeah, what you're comfortable with, and what are your priorities as an investor.
Okay. Let's squeeze in another caller here. Rob's on the line in Montreal. Hi, Rob.
Hi, Marella. Hi, Colin. Coca-Cola, KO. Your thoughts, please. Thank you.
Okay. Haven't talked about the beverage space in a while. There have been a couple of knocks, of course, on companies that have these processed drinks, high sugar. People are more health conscious these days. Let's take a look at Coca-Cola, which is up over 3 years, hovering at 70.30 today, but down sort of end of last year, start of this year.
Yeah, it just seems to be consolidating at this point. I mean, the good news is the underlying trend has been basically positive. You're seeing nice higher lows. However, you are seeing as well this flat line here. I guess let's call that around 72.50, where it just doesn't want to get through. So again, this is kind of it is a nice ascending triangle pattern forming. But at this point in time, it's hard to say which way it's going to break from here. So you're in this kind of 66 to 72.50 kind of range, and you're just kind of drifting back and forth within it right now.
Okay. All right, let's take a quick break. We will have a look at past picks from Colin when we come back. Stay tuned. Welcome back. Time to have a look at past picks from Colin Cieszynski from October 2nd of 2025. At the time, he chose Barrick Gold, ABX on the TSX, 47.42 at the time, 66.20 is where we are today. So 40% upside return and total return. This would have already been mid-step with the gold moving up, and you obviously saw some more upside for Barrick Gold already deep in the trend. Are you guys holding on to the gold that you have from Barrick?
Absolutely.
Okay.
We still own it. So in our Canadian stock rankings, where we rank all stocks by how they are comparing against each other on relative strength, Barrick Gold is still number one. Number one ranked Canadian stock in the Canadian stock universe. So we still own it. We're really happy with it. It's acted where we caught it was at the end of last summer when it started to really break out, and it had been trailing a lot of the other gold producers. And 3 months ago, we were having the conversation of, I can't believe I'm buying Barrick. Well, I'm delighted we bought Barrick because it had been so beaten down for so long. And then it finally broke out, and it's come back into the sunshine, and it's had a fantastic catch-up rally. So we're really pleased with that.
There's also going to be, I believe, a change in leadership there.
Yes.
Any concerns about that?
At this time, the market seems to be pretty happy with it. So what we would be watching for, though, if there was, we'll see it in the price action and in the relative strength. But at this point in time, it's beating everybody. So the market seems to be pretty pleased so far.
All right, people are happy owning Barrick. Okay, let's get to your next past pick, GE Aerospace, GE on the New York Stock Exchange, 299, 45 US at the time, up to 317.28 today. 6% upside, 6% total return. GE Aerospace, you remember at the time what made you interested in the space?
We've been holders of GE Aerospace on and off for a number of years. It tends to be relatively highly ranked most of the time, and the aerospace sector generally has been strong. And yeah, it does have its period of. The last few months there was some consolidation through the fall, but it has started to break out again, and it's been a nice long-term winner. It's still relatively ranked high. The sector is also relatively ranked high. So it's just continuing to kind of grind its way higher.
You said you've owned it on and off. So have you sold it at certain points and reinvested?
Yeah, we have sold it out at certain points when it dropped down in the relative strength rankings. But at the same time, when relative strength comes back, we're prepared to buy back in on not just on GE but on any stock in our universe if the if the relative strength tells us to get out, we get out. And when our rules tell us that it's time to get back in, we get back in.
Okay, let's go to your third pick from October of last year, then SoftBank on a CDR. So this is in yen, and it is at 19,295. At the time you recommended it, 4,263. Now, so 12% drop in return, same for total return. Can you first tell me a bit about SoftBank?
Yes, absolutely. SoftBank does a lot of investment in technology companies and in AI companies. And one of the things they were most known for was their holdings in NVIDIA that they did incredibly well on. And that peak back in October is pretty close to about when they sold their NVIDIA holdings. But so owning SoftBank, and I spoke to one of the previous callers about how much volatility are you willing to live with? And one of the things we found with SoftBank was that it was an incredibly volatile stock to hold and to try and trade. So it would go screaming, and it would go back down, and in the end, we actually sold it back in the fall in one of the downdrafts, and we never got back into it. We remain out of it, and we can see on the chart here that it had its great run, it had its big correction, and now it's just kind of stagnating in that 4,000 to 5,000 range. So it doesn't have the relative strength that it did before, so it's out right now.
Okay, that was for SoftBank from October of last year. Let's take another break. We'll line up more phone calls for Colin Cieszynski. We're back in just a moment. Stay tuned. Welcome back to Market Call. Let's go to Deborah. She's on the line in Okanagan Falls today. Hi, Deborah.
Good morning, Colin. Today, my question is on Broadcom. There's lots of consultants speaking on this one lately. It's pulled back from the high at 414, and you can't see this on the line chart, but there was an upward gap at 307 in September 2025. So my question today is, do you think it will pull back to 307? Some analysts believe that gaps get filled either up or down, and I'm looking for an entry point. What is your stance on this?
Okay, thank you for the question. In the tech semiconductor space, Broadcom shooting up sort of end of last year, so it's 343 today, dipping up after that high. Where would you call that high? Let's pull that up.
Could we change to a one-year chart, please?
Okay, I think it was a high end of last year at 412.97, short of 413 is what we're looking at, and then come back down to the 340 range after that.
Yeah, so we can see it had that kind of peak, a bit of a sell-off, and now it's drifting, right? So we had it bouncing around, say within $20 of 350, had it pop up to 400 for a short period of time. Now it's kind of back to where it was. If I draw just this line along here. And so when I talked about trends, we've had this break, but what's more important is that 350 has now emerged as lower resistance. So this is struggling a bit, and we've seen this in other AI stocks, and flatly, we used to own Broadcom, and we rotated out of it. We actually rotated out of a number of our AI-related stocks towards the later part of 2025.
Okay.
And we did see that come down. So we owned a number of them, and we rotated out into other parts of the market. So there's definitely been some profit taking in the AI space. And as I said, what concerns me with it right now is it's gone below 350 and it hasn't gotten back above it yet. So that technically is a problem. Otherwise, that those lows there in around closer to 300 do look like support. If those fail, the stock would be in quite a bit of trouble, and next support would be around closer to 280. But at this point in time, as I say, it had just...
She's looking for an entry point. So where would you suggest, what number would you look at entering it, or what would you look for to get in?
Yeah, I think at this point in time, you'd want to see it kind of establish support and actually show that it's moving back up and that it's not just continuing to falter.
Okay, so it's already pushed down under the 350. So if you'd wait a little bit longer.
Maybe if it broke out probably want to see a breakout or something kind of more positive and constructive at this point. The one thing you do have is a bit of a higher low, but I think at this point, given the way it's been acting, you'd want more of a confirmation of an upturn at this point in time.
And so maybe get it on the tip of that.
Yeah.
Got it. All right, let's go to Kevin. Kevin's on the line in Kingston, Ontario. Hi, Kevin.
Hi there. Thank you for taking my call. My question's on Novo Nordisk. It had an announcement recently that it has the new diet pill, and it's moved up a little bit over the last week and a half. And I'm just wondering, would you get in at this price, or do you see it moving up more? On its volume seems to be increasing, so I'm just wondering your take on this. Thank you.
Okay, thank you for the question. I think people expected a bigger bounce from that announcement, but it sounds like everybody had already talked it out, and that was already sort of in the stock optimism here. So it didn't get the bounce people thought it was going to get. When you look at Novo, what do you see here?
So what I see is this was actually a stock we owned back in 2024, and we had sold it when it broke the uptrend and its relative strength fell apart. And it's been trending downwards through to about the fall. I mean, it's had 6 months to establish a decent base. It has broken out of a downtrend. It has gotten back above 50. It's acting like it's under renewed accumulation. So it may not go screaming back up like it did back in 23, 24, but it's looking pretty good here technically. It looks like it's coming back under accumulation.
Okay, so would you maybe put some money in at this point?
It's definitely looking intriguing here.
Okay, one to watch for that breakout if it happened. Let's go to another caller then. Mike is in Kelowna, BC with a question. Hi, Mike.
Hi. I started a position in TFI at $130, and I'm hoping to buy more in an uptrend. Your thoughts, please.
Okay, let's pull up TFI, which has had a difficult year, as you can see, that big drop-off in 2025, and it's struggled to come back, but it seems to be doing that now. What is that lower support level that you see there?
Yeah, this looks like this is a really nice looking chart. I mean, it sold off. We can see it's coming back. It's definitely broken out of a base here, and it's kept on going. And it looks like it's taking things down. It's broken out over 140 and held it, broken out over 150 and held it. That's really constructive, and that's the kind of thing you want to see in terms of accumulation here. So it does look like it's well supported and seems to be on the comeback trail.
Okay. That is for TFI, again, which has struggled last year, seems to be doing a little bit better at the start of this year. Let's go to our next caller then. Jerry's on the line in Toronto. Hi, Jerry.
Hi. I got a question on Chemtrade Logistics Income Fund, and I own that. I've had it for a long time. It pays me nearly 6 cents a month dividend constantly. But what I've noticed in the last 5-6 days, it goes up 3%, and then it falls 3%, and there's very wild swings. So I'm just wondering, why is there so many? One day it's worth 50 cents more, and the next day it's worth 60 cents less. So that's sort of where I'm confused, because when I look at it every day, I see such volatility. So I just don't know what the answer to that is.
Okay, so looking for sort of a reason behind that. Is there any sort of reason that would be obvious to you that it would move in that way?
I think what you're finding over this time of the year is stock trading tends to slow down, especially less this week. Everybody's back, but the previous 2 weeks, it's hard to read much anything into trading over the holiday weeks because you run into people rebalancing their portfolios, people making changes, people doing tax loss selling if it's available, and generally thinner trading because a lot of people just take the holidays off, and so you can get things like this where if things are thinly traded, you can have a day where the stock went up just because there happened to be a buyer that day, or it went down because there happened to be a more motivated seller that day, and it's hard to read anything into those kind of one-day things through the holiday period, and even through the first week or two of a new year. So the last 2 weeks, the first 2 weeks of the year, you can just get more volatility just because people are doing things.
Okay, so sort of leave it a little bit longer to watch more towards the end of the month?
Mm-hmm.
Got it. Okay,
yeah.
Let's take a quick break. We'll line up more phone calls and email for Colin. We're back in just a moment. Stay tuned. Welcome back, and thanks for joining us. Let's go to Matt. He's on the line today. He has a question for Colin. Hi, Matt.
Hi there. I'm just calling about Algonquin Power and Utilities, AQN. I like the company long term, and just on the chart view of it, I like the professional's view on the chart view, but it looks like it's consolidated at the bottom, ready to spring up, and I've been adding slowly. Do I dump a bunch more in or wait? Thank you.
Okay, thank you for the question. Algonquin Power at 880 today, and the last support level is what, 750, you think there?
Yeah, 750. I like this chart a lot. If you look at it, you've got, it's a head and shoulders bottom. You've got a shoulder there in 2023. You've got a shoulder here in 2020, later 25, about September. You've got the head here at the end of 24. So that actually is a really strong technical base. And you're creeping up on this neckline here, getting up closer to $9. So right now, and steadily higher lows. I mean, this is a stock that looks like it's almost ready to break out of a base. I mean, so it's very constructive and encouraging here.
Okay, so this is in more sort of renewable power generation, that kind of thing, which did get hit last year by policies in the U.S. We talked a little bit about energy at the start of the show. Can you sort of give me what you're seeing in the wider energy sphere, maybe outside of oil? Like we talked, natural gas is getting hit, for example, renewables. Yeah. Are they beginning to come back, renewables?
Yes, they are starting to come back. Natural gas I'm seeing is more seasonal because of the beautiful weather we've got outside today. It's absolutely crushed, but it's crushed the natural gas price. But if things get colder, when things get colder again, we'll probably see the price. I mean, that's pretty common. They say that more than anything, the driver of the natural gas is how people feel when they open their windows in Chicago. So
interesting. And we've had weather all over the map. Okay,
yeah.
Let's go to an email then from Lauren. Lauren says, hi, what's your opinion on CNR? Good long-term hold. Thanks for that. So Canadian rails here. And again, one of those stocks that has been hit last year. Transportation got pretty battered. It's holding at 137 today, but a bit of a trend up towards sort of the end of last year. What was the low there sort of at the end of, or sort of in the fall of 2025? What would that be? Can you tell?
That looks like it was probably 125-ish.
Okay.
No, maybe a little more. Let's call it 127.50.
Okay.
Probably. But it's quietly been creeping back up from there. So it looks encouraging so far. If we continue to see the North American economy remain robust, that could be helpful for the rails. And we'll get a sense. A bit more sense of this in over the next few weeks. We're heading into earnings season now, so the U.S. banks start reporting next week. Things like railroads start reporting the week after. So by the end of the month, we should have earnings results from most of the railroads, at least the big ones, on both sides of the border. So that should give us a better idea of where things are starting to head for them and their outlook for 26.
I think people look to railroads, of course, for a longer-term hold, which is what Lauren is saying. Would she be safe holding something like a railway historically for a longer term?
Over the longer term, the railroads do tend to reflect the economy fairly well. So, I mean, in terms of as long as things are continuing to show growth, the railroads continue to see demand for a lot.
Okay. Let's go to another email then. From Randy, he says, Happy New Year. I'd like to have your guest opinion on Atco's chart. Let's move to Atco and have a look at that. There it is, 57.28 today. Not as volatile a chart, but what's your read?
Yeah, it's not as volatile. It's not as actively traded as other companies, but this is incredibly well supported and just basically has been trending upwards since late 2023, consistently higher highs and lows, and it's acted quite well, and it's been very well supported.
Okay, so that is Atco. Would you put some money in where it is today? Because obviously it's at a high.
We at SIA, as long as something is showing relative strength and is showing that it's attracting capital, we are fine with buying high and selling higher. Okay. That's actually what we try to do. We try to buy things that are showing strength. So we're good with as investors. We do buy breakouts and we do hold, looking for continued returns. We realize we're never going to get the top or the bottom, but we want to try and capture as much of an upward trend as we can in stocks that are outperforming.
Which I think is something investors need to take note of, because sometimes everybody's waiting for the bottom. and it's really hard to catch, as you say, the bottom. Yeah. And they need to look at something that maybe is trending up and then just take advantage of it.
Absolutely. So that's why we look for the turns, but you won't always see the turns right away, or something that's in a trend. Just because it's in an uptrend doesn't mean it's going to end. And we had the conversation a little earlier about, well, what are the signs of a bottom, or what are the signs of a top?
A trend being over, yes.
Yeah, but otherwise, the trend is your friend till it ends.
Okay. All right, let's take a quick break. We will come back with new top picks from Colin. Back in a moment. Join us on Monday for Market Call. Darren Sissons will be on the show. He's partner and portfolio manager, Campbell, Lee and Ross Investment Management. They'll take your questions on global and technology stocks. That's Monday. And time now for some new top picks from Colin. We're going to start with First Quantum Minerals, FM on the TSX. Tell me what you like about First Quantum.
So I talked about our Canadian stock rankings based on who's winning the most head-to-head battles, and First Quantum is number 2, and number 1, as I mentioned, was Barrick Gold, which is in our previous picks. So First Quantum is number 2 ranked right now. It's doing fantastic. The stock has had a great year in 2025. It's broken out through its 2023 high, and so a couple of things I like about this one in particular is it's one of the senior copper and base metal miners. And the copper price hit a new all-time high earlier this week. And the reality is, in North America, if you want to trade a senior base metal producer, there just aren't very many of them. So the ones that do exist do tend to attract capital. And when the commodities are running, they tend to attract capital and as such climb up to towards the top of the rankings. So okay. It's been doing really great, and we've been pleased with it.
And we talked a little bit about the fact that you said base metals you think are going to run this year generally because they chase commodities.
Yes, and in fact, I think we're seeing good demand and the global economy is holding up, and we're seeing demand for commodities, and also copper in particular, of course, is used in absolutely everything. So as we get build out, whether it's in infrastructure, AI, whatever, it's helping to boost demand for copper.
Okay, let's get to your next pick then, which is Teva Pharmaceuticals, TEVA, on the New York Stock Exchange. Tell me about the company a little bit more. They obviously are pharmaceuticals, but where are they based? How big of a company is this?
This is a large cap, one of the world's bigger pharmaceutical companies. Their headquarters is in Israel, and we're using the listing on the ADR listed on the New York Stock Exchange. We can see in terms of this stock, it is number 1 ranked in our ADR CDR universe right now. So our international stocks, American and Canadian depository receipts, this is ranked number 1. It is beating everything. And one of the themes today is that we have seen rotation into drug stocks. And this is one of the ones that has benefited the most. And we can see here it broke out over $21 back in September and has kept right on going. And it's up at 32 now. So this stock's been under very strong accumulation for about 6 months now.
Is there any reason you see for this pharmaceutical company to be doing so well in comparison to the others? What do you think is pushing Teva to perform and outperform maybe some of the other pharmaceutical companies or companies in that same space?
Specifically, I'm not sure. We're just focused primarily more on price and on relative strength, and it was just when we look at the market, we look, is the market favorable for equities? Yes. Is the which equities? Well, what we saw in our asset classes were Canadian and international have been outperforming U.S. equities. And then we went to the next stage of looking at sectors and what sectors are outperforming. So then the drug companies were starting to show relative strength. And then we go to stocks and we say, okay, well, of the drug companies then, which stocks are showing the highest relative strength? So that's how we work through our process. And this was one that came right to the top.
Okay. Good to know. Let's get to your third pick then. BMO Global Gold Index ETF, ZGD on the TSX. We've talked about the incredible run gold has had over the last year and continues to do well. This is your top ETF in this space. And would you put new money in? We talked about whether or not, like with that kind of run up, would you want to put new money in right now?
At this point in time, the gold stocks have done well. The gold and silver prices have done well, and they remain in a favorable trend. So within our Canadian ETF rankings, which is all the head-to-head battles of the Canadian ETFs, that's broad-based, that's sector, that's fixed income, the whole 9 yards. This is number one. This is the one that's winning the most, and number two is the BMO Junior Gold ETF, which is ZJG. On the TSX. And so when we look at the two, we say, okay, well, this one is slightly higher ranked, but going back to our previous conversation about the TSX 60 versus the composite, among the two of them, they're the top ranked. So then for an investor, it becomes, which are you more comfortable holding? As an institutional investor, we're more comfortable holding the senior golds rather than the junior golds based on our investment criteria.
But that being as well, you own Barrick, but you also own the gold ETF.
Yeah, we don't own this one right now in our funds, but we have owned it several times in the past, and it's one that we view favorably, even when we're not actually holders of it. We do right now. We have some other sector ETFs, similar sector ETFs we own.
Okay, let's leave it there. Colin, thanks for coming in. Good to see you.
Thank you. Great to see you.
And thank you for joining us today on Market Call. We'll see you back here again on Monday.